What if the dollar was on track to peak within the next 5 years? This could change everything.
Indeed. As we dive into today's financial overview, we explore pivotal insights impacting equities, bonds, and inflation.
Welcome to Financial Insights in Minutes, where we distill the day's top videos into concise summaries.
Today, we'll break down the most significant expert discussions from monetary crises to brand innovations.
Let's jump into the summaries of each video for crucial takeaways. Welcome to David Lin's channel. Today we're diving into the monetary crisis that's begun and the dollar's peak around 2028. Joining us are the insightful Peter Grage and Michael Campbell.
That's right. We're unpacking the economic turmoil and what it means at both individual and national levels. Get ready for some eye-opening insights.
So what's the main theme of today's discussion?
The thesis is stark. We are facing a monetary crisis of unprecedented scale. Both guests assert that it's not just an economic issue, but a personal one, affecting millions more than previous downturns.
What did Peter say about the latest labor market trends?
He highlighted that recent non-farm payroll growth has been revised down dramatically, indicating a labor market much weaker than initially thought. This could signal deeper issues ahead.
Any thoughts on Federal Reserve actions?
Both speakers foresee likely rate cuts by the Fed, but emphasize that political landscape will greatly impact those decisions. It's a multifaceted situation.
How is inflation affecting citizens?
Michael notes that inflation has driven food prices up 24%, drastically impacting living standards and leaving many feeling worse off financially.
What long-term predictions did our guests make?
They predict the dollar will peak around 2028, with a shift to a new monetary system taking shape thereafter. It's a pivotal moment looming on the horizon.
And what about individual finances?
Expect greater financial strain on households. Increased taxes and cuts to government services are anticipated, leading to a more pressing impact on everyday citizens.
To wrap it up, what's the takeaway here?
The overall message is clear. Start focusing on financial security at the personal level. With looming monetary changes, smart financial planning is crucial.
What about the Federal Reserve's role?
The Fed must act decisively and transparently to navigate the upcoming changes. Without effective strategies, the outcomes could be dire.
We want your opinions. Do you agree with the predictions about the economy?
Drop your thoughts in the comments. Let's engage in a deep dive about where our economy is headed.
Welcome back to Eurodollar University. Today, we're navigating through the turbulent waters of central banks making emergency rate cuts. Is the Fed next in line?
Absolutely. The recent panic among central bankers indicates rising unemployment and the potential for more rate cuts looming on the horizon. Lots to unpack.
So, what's the core message we took from the recent video?
The thesis centers on how central banks are starting to make emergency rate cuts as indications of a recession escalate, particularly as unemployment rises.
Let's break down those key points. What initiated these cuts?
The panic is real. Central bankers are cutting rates in response to rising unemployment, trying to prevent deeper economic woes.
Interesting. How do historical trends play into the current scenario?
History tells us that rate cuts typically emerge at the onset of a recession, and data suggests March and April may have been our latest inflection points.
And what's going on with the labor market?
Consumer confidence has plummeted, directly correlating with rising unemployment figures, raising alarms about a potential recession.
What are some predictions we should keep an eye on?
There's a strong chance the U.S. may already be experiencing a recession, as numerous indicators suggest we've hit significant downturns since March.
To wrap it all up, what should viewers take away?
Central banks appear to be reacting too late. As we see the signs of recession, proactive measures and more transparent strategies are needed.
What's next for these policies as we head into uncertain waters?
The approach to managing these economic challenges is crucial now. What do you think will happen next? Drop us your thoughts in the comments.
Welcome back to Mott Capital's Market Chronicles. Today, we're navigating the currents of the S&P 500 and its latest movements. The big question, are we seeing another significant top forming? Stick around for tonight's important clues from key financial figures.
Indeed. With central bank speeches on the horizon and significant market signals in flux, it's a perfect storm of speculation. Let's dive right in.
What's the central theme here? What's really brewing in the market?
The crux of the matter suggests that the S&P 500 may be hitting a peak. Numerous indicators, along with central bank comments, could signal a potential downturn.
Starting with the recent sell-off, what's happening there?
Right, the S&P 500 saw a notable dip, down 74 basis points as it opened positively only to reverse course abruptly. Indicators suggest market uncertainty.
What about those upcoming speeches that could impact trading?
We've got pivotal speeches from central bank leaders, particularly Jay Powell, who could set the tone for upcoming monetary policy adjustments.
Let's talk technicals. What signals are we seeing?
There's significant correlation between USD CAD movements and S&P trends. As USD CAD trends upwards, it traditionally indicates a possible top for the S&P.
Are historical patterns playing a role here?
Absolutely. Previous tops in the S&P have led to corrections, and we might be on the brink of a similar situation, judging by current trends.
Looking ahead, what are the major predictions based on today's signals?
If current trends hold, we could face a broader market decline. Breaking critical levels may set off panic in the investor community.
And how might central banks affect tomorrow's trading?
Potential shifts in monetary policy from central banks may result in significant market reactions. Interest rate adjustments are especially pivotal.
As we chart these waters, what's the bottom line?
The S&P 500 is at a critical turning point. All eyes will need to be on central bank signals and correlations in the coming days.
We want to hear from you. What strategies do you think are best for navigating these potential market changes?
Share your thoughts in the comments. Let's keep this conversation flowing.
Welcome back. Today, we are diving into the depths of macroeconomics in Bob Elliott's August 2024 webinar, aptly themed Volatility is Back.
Indeed, this month we're focusing on what's truly priced into the market and how investor expectations play a key role amid the chaos.
So, what's the big idea from this webinar?
The main thesis revolves around the current market pricing, indicating a significant economic downturn. Investors are bracing for a possible recession, as evidenced by the market behavior.
Let's break down the key points. What can you tell us about short rates?
Currently, there's an implication of 175 to 200 basis points of cuts within the next year, suggesting a serious economic shift, typically indicating an impending recession.
And what does the earnings picture look like?
Stock PE ratios approach tech bubble levels, though today, earnings growth appears more substantial. The market anticipates a crucial margin increase to support these earnings projections.
What about the influence of AI on the markets?
There are hefty expectations centered around AI investment, leading to increased earnings, but the market may be pricing that potential inaccurately.
What are the big predictions moving forward?
Analysts foresee an economic slowdown that could prompt swift interest rate cuts and pose challenges to corporate profits due to rising costs.
Finally, what are the take-home messages from this webinar?
Ultimately, the balance between market pricing and economic signals suggests we're in for a turbulent period ahead. Stay tuned to see how this unfolds.
What are your thoughts on the current market expectations? We'd love to hear your insights.
Leave your comments below. It's essential to understand where everyone stands on this economic roller coaster.
Welcome to Public App. Today we're diving into a delightful topic, the business of ice cream, specifically vegan ice cream and celebrity collaborations.
Absolutely. Joining us is Ben Van Leeuwen, the co-founder and CEO of Van Leeuwen Ice Cream. With his passion for quality ingredients and innovative flavors, this conversation promises to be as sweet as the ice cream he creates.
What's the main thesis of this episode? What do we learn from Ben?
The core thesis centers on how Van Leeuwen melds high-quality ingredients with innovative vegan options, alongside discussing their business strategies, partnerships, and the ice cream industry's trends.
Let's dive into the origin story of Van Leeuwen Ice Cream. What does Ben share about their beginnings?
Ben recalls starting Van Leeuwen to serve high-quality ice cream using premium ingredients, an idea that remains at the heart of their mission.
How's business going for Van Leeuwen this summer?
Ben reports phenomenal growth, especially during peak ice cream season, with record sales figures and exciting expansion plans ahead in multiple cities.
Let's talk about the vegan ice cream innovations. How does Van Leeuwen stand out?
They apply the same passion for quality in vegan ice creams as dairy, ensuring exceptional taste and richness without the gimmicks.
What challenges is Ben facing in the current market?
Inflation has significantly impacted costs, but he insists on maintaining their exceptional quality rather than cutting corners, which he feels is a long-term sustainable strategy.
Looking ahead, what's next for Van Leeuwen?
The future holds exciting projects with the opening of the Flavor Lab, aimed at innovative ice cream experimentation and direct customer engagement.
What predictions does Ben have for the vegan ice cream market?
He believes that the demand for high-quality vegan options will continue, especially as more consumers seek out healthier yet indulgent desserts.
What can fans expect from Van Leeuwen in terms of expansion?
With plans for new scoop shops in cities like Nashville and Atlanta, fans will soon find their favorite ice creams closer to home.
As we wrap up, what's the big takeaway about Van Leeuwen?
They emphasize that maintaining quality in both ingredients and service is key, a formula for success amidst market challenges. It's worth it when you see the joy on customers' faces.
Before we go, we want to hear your thoughts. What do you predict for the future of ice cream?
Let us know in the comments what you think. It's a sweet future ahead for ice cream lovers.
Today, we uncovered diverse theories concerning the looming financial horizon.
While we heard agreement about the urgency for caution, significant nuances among the predictions provided rich discussions.
Thanks for tuning in. Keep your eyes open for more financial insights in upcoming episodes. If you'd like more time-saving content, please remember to like and subscribe. Thanks for watching Financial Insights in Minutes for August 23rd, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.